My dear student, once again I welcome you all on my channel. See this question based on our previous class discussion. So now we can answer this question that a statement has been given here which say that financial management involves optimal procurement. You remember this was the word which was used in the definition and uses of finance. So now we have to explain it. Now I'm giving you a hint. This would be very easy for you to explain this question. See, there are two aspects of financial management. One is optimal procurement of funds and the another is optimal uses of funds. Optimal procurement of funds means we need to identify the various sources of funds. You know, in class 11 you have studied different sources of funds. You remember it? Equity share, preference share, debentures and all those. So that is, we need to identify that what are the various sources available. Second is that we need to evaluate and select the best source. And how will you understand that this is the best source? What you need to do, that you need to see that the cost of that particular source should be low, number one. Number two is the risk associated with that particular source should be less. So in this way you can ensure the optimal procurement of funds. Correct. Now see the second aspect. This is what optimal uses of funds. So here uses of fund means what? We need to invest fund in a profitable channels only. And how can you ensure that this is a profitable channel? When you can ensure that the return of investment is more than the cost of funds, right? Like you have raised fund by issuing debentures and the rate of the debenture is 10%, right? Now wherever this amount you are going to invest, it should be more than 10%. That will be your return on the investment. And if it is not more than 10%, then it is not a profitable channel, right? Like you have taken a loan at the rate of 10%, right? And wherever you are going to invest this amount, from that particular investment, you should get more than 10% as a return. So the return on investment should be more than cost of funds. Then only you will say that it is a profitable channels. Correct? So after this discussion, now you will be able to define it very easily. Okay? Okay, now before we start another topic, there are two questions for you. The first question is, what is the main objective or aim of financial management, right? When you are going to manage the finance, so what are the major objective which you will keep in your mind? And the moment you will answer this, I would ask one more question to you, that is, what is wealth maximization concept? Okay, now let us understand these two things, but before that you please write this question. Okay, so now let us talk about the objectives of financial management. Basically, the primary objective of financial management is to maximize shareholders' wealth by maximizing the market price of a company's share. The wealth of shareholders is to be calculated to understand this. So this is the primary objective. Second is that the financial manager need to maintain the liquidity. Third is profit maximization. Fourth, proper utilization of fund. And then meeting all the financial commitments which the company has made. So these are the basically these 5 objectives of the financial management. But out of this, the primary is this one. So let us first understand this. The things would be more clear to you. The prime objective of financial management is, as I said, that to maximize shareholders' wealth. Now, how to calculate it or how to find out that how much is the shareholders' wealth? The formula to calculate the shareholders' wealth would be the number of shares held by the person and then what is the market price of that particular per share. Now, let us take an example. Suppose Mr. Shonak is having 200 shares at the rate of 10, means 10 is the market price of that share. So he is having wealth equal to rupees 2000, correct? Now suppose the market price of that particular share is increased by 2, it becomes rupees 12. So now the wealth of Mr. Shonak would be 2400. But if the market price of that per share declines, it becomes 8 rupees, then the wealth would be also declined, that will become 1600. Earlier it was 2000, right? So in this way we can understand that how to know the shareholders wealth. So the basic element in this is what? The market price of share. So all the financial activities within an organization are focused at realizing the objective of wealth maximization. Getting it? So this can be achieved by ensuring that all the financial decisions are cost effective. Then only the wealth would be maximized. So maximization of the market value of equity share. Market price of equity share increases if the benefits from a decision exceeds the cost involved. So we can say that the objective of financial management is to maximize the current price of equity shares of the company or to maximize the wealth of owners of the company, and that is the shareholders. As I have explained this while we were discussing the meaning of financial management, I said a decision is taken about investment in a new machine whenever the aim of financial management is to ensure that the benefits from the investment exceed the cost so that some value addition takes place. Similarly, when finance is procured, the aim is to reduce the cost so that the value addition is even higher. Okay, the second one is profit maximization. Here the primary, as we discussed, that the primary aim of financial management is to maximize shareholders' wealth. That is only referred as the wealth maximization concept. And this is because a company funds belong to the shareholders and the manner in which they are invested and the return earned by them, that determines their market value and price. But remember, my dear student, the objective of increase in value of equity share does not mean that finance managers should involve in manipulative activities to bring rise in price. That is not fair. The rise in price must come with the growth of firm, with increase in profit of firm, and with satisfaction of all the parties associated with the company, right? So with the objective of wealth maximization of equity shareholders, following objectives automatically get achieved. What are those? A, the liquidity is maintained, and then you have to meet all your financial commitment, and then the proper utilization of fund. The proper utilization of fund means wherever you are investing the money, the return should be always more than the cost of that fund. So this you have to remember in this. So in fact, in all financial decision, whether it is major or minor, the ultimate objective is that some value addition should take place. Correct? So all those avenues of investment, modes of financing, ways of handling various components of working capital must be identified, which will ultimately lead to an increase in the price of equity share. Correct? So it can happen through efficient decision making, and decision making is efficient if out of various available alternatives the best is selected. So the financial decision become very important. So in the next class, we would be discussing that what are the types of financial decision, and all those things we'll discuss about it. But as a homework, what you should do, that you find out that at your own level, what are the decision which you make and which are financial in nature. Number one. Number two, that in your home, whatever the decision are made which are financial in nature, what are those? And so just write, in brief about all those things, that what are the decisions normally you take. And then next class I would be talking in detail about this financial decisions. Okay, so do this and see you in next class. Thank you.